Good morning, everyone, and welcome to the Quantum Leap Morning Leap session. It is Friday, December the 4th. My name is Doug McKay. I'm the founder of Quantum Leap. Each morning we come together and take a look at the market structurally, look at where we are within the different time frames and the different trends, and then drill down to set up our trade levels and our targets and our hypotheses for the day. Before we get going, this is a subscription room, so if you want to come in for a free trial, let me know. I'll put my contact information on in just a minute. Before we do that, though, please read the disclaimer. Nobody here at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see here at Quantum Leap are for education purposes only. Please trade your own due diligence and your own trade plan and your own risk metrics. Here's my contact information. This isn't a commercial venture. This is just something that we do, but it does cost money to run, so we do run a subscription. Contact me at quantumleapfutures@gmail.com or give me a call, 647-545-8065, or simply just send me a Skype request at Doug_McKay. There is probably about 300 plus videos, that's 300 plus days of history that you can go and take a look at these sessions. We do the same thing every morning before trading. And then if you like what I do, please follow me on Twitter at Crazy2. All right, so let's start with the news. Of course, we had unemployment change in Canada, came out at minus 35.7, expected minus 0.97. Trade balance came out at minus 2.8 versus 1.7. Unemployment rate just slightly higher than expected. Labor productivity just slightly higher than expected, 0.1 versus 0.2. And average hourly earnings in the U.S. came out as expected. More jobs, 211 versus 201. Unemployment rate remained the same, and trade balance was minus 43.9 billion versus 40.6 billion. There's no other news today except for the IV PMI for Canada at 10 o'clock, but the big one is going to be what Draghi has to say at 12:20 today. Okay, so let me just quickly bring up yesterday's trade levels. So yesterday was expecting some type of reaction, was not expecting the big move that we made yesterday. I figured we'd come down and test the 49 and bounce from there, and we went down basically another 10 points almost. In itself, I had a good morning and I had a tough afternoon. I ended up getting caught in this trade right here, which was one of the Renko line walks on the lower Keltner line that got away from me and gave back. Could have got myself in, well, I never really got in trouble because I had the Theo. I had a lot of Theo. And then I finally took a couple swings long, and I got paid on the third one. So I took this trade right here, which was really nice. I made about 10 points on that. And just, basically we chopped around into the close. We closed below the year open. So that's the first close that we've had below the year open for a while. And I think that today it's going to be the battleground. The whole hypothesis is going to be based on whether or not we're above or below that 55. And I'll show you why. It's not just because it's the year open. It's also the LVN from yesterday from the triple distribution. It's also our overnight VPOC. So they are battling this area right now. We're just trading just above it right now at about 58. But let's start with our normal morning routine. I like to start with the basic candlestick chart and moving averages. I use a 9 EMA and a 20 SMA on all my charts. And I'm looking for where we are in the trend in terms of the different time frames. I start with the monthly and I work my way down to the intraday. And I'm looking for where it's been violated, where it's weakening, where it's getting challenged, or how strong the trend is based on slope and separation and price action. So you can see beautiful trend for the last few years. First time we've tested below the 9 and the 20, going all the way back to 2011. But you can see back in 2011, once we challenged it, we had continuation. So far, we've challenged it in September and August, and in October we took it back, and so far we're holding above it in November and December. Although December is weakening. Yesterday we came down and tested the 9 EMA. We're losing separation and slope at the same time, so there's weakness coming in the monthly. On the weekly, we had a downtrend, and then in October they took it back. They challenged it in November, took it back, and now they're coming down and testing it again. We just tried to break below the 9 and just bounced off of it. We've got no slope at all. They do have separation, so basically consolidation on the weekly. On the daily, you can see that we basically rolled over, and yesterday we had that big move down. The range for yesterday was quite big. And what was the range? The range was 55.25 points. Our average 20-day ATR is only running at 25.96. And right now we're below the 9 and the 20. We're starting to get a downward trend started. There's a possible cup scenario that could set up here, inverted cup. We'll have to see. We are creating a small technical gap on the daily, so we could bounce back up into the 71. I'm looking at that 74.50, as you probably know. And then going down to the intraday, you can see that we rolled over yesterday, and intraday 4 hour. We rolled over and we started this downward trend, created a technical gap. Here's a great example of a FUBAR Mr. Sneaky tech gap. In fact, we had a FUBAR Mr. Sneaky, double Mr. Sneaky, and then a rotation up. We did not close the tech gap yet, but it could be closed through time. We just don't know. Possible a bear flag here as well. We'll have to take a look down the shorter time frame. Move back to test and close the tech gap will bring us up into the 65 level. But the trend is to the downside on the 4 hour. On the 1 hour, we've had this downward trend. Again, another good example of a FUBAR Mr. Sneaky tech gap. This one's already been closed. We got back above the 9 and the 20, and then we've come back down, and we're testing the 20 from above. So we've had a downward trend, good slope and separation, tech gap, close of the tech gap. Now we're back. We're getting slope and separation again, but we're not below the 20. We could get continuation if we break below this 20 SMA, and basically that's sitting right on the year open as well at 2055. Going to the 30-minute, basically more consolidation on the 30-minute. And again, good slope, good separation. We did have a FUBAR. We didn't get the Mr. Sneaky on it, but we did get the tech gap, and it closed the tech gap. But consolidation on the 30-minute. 15-minute, clearly just consolidation in this area. No clear trend, but we are below the 9 and the 20, so we are seeing some weakness, and we could get a start of a downward trend with a little bit of slope. And then the 5-minute, we had this downward trend, and then they took it back on the news and created the tech gap. Another example of a FUBAR Mr. Sneaky tech gap, closed the tech gap, and now we're coming back down and challenging the year open right now. It's all going to be about this 55. Above 55, you want to be trying to get long, buy the dips for a slow grind back up and possible start of a Santa Claus rally. I think it's still a little bit early for a Santa Claus rally. Below 55, you want to be looking to the short side. Okay, so let's take a look at what that looks like in the bigger picture and the structure. We Yesterday, we tried to break out of the balance that we're in this micro composite that runs from October the 16th through to the through to yesterday. We did break out of it and we closed below it, but overnight they've taken it back and we're just inside, and we're trading right in around this former micro composite VPOC that runs from the November the 12th through to when we broke back inside of the longer term value area. So you can see we're trying to find some balance here. Of course, it's right just above the year open. The value area low right now is 53.50. I'm really watching this 49.75. 49.75 is still going to constitute to me the key line in the sand for the day. We could come down to close this tech gap here. The open gap or closed gap, I should say, down here at the 51.50 area. But if we hold above the 53 and the year open, then the most traded price going back to 2013 is up here at 78.50. It did shift from the 86.75 down to the 78.50. That was our first clue that we were going to see some weakness come back in here. Targets above 57.50, above 55. A little bit of resistance coming in here in the 61 area. I'm using the range high from overnight, 62.75. And then the main target is right here at the 67, 66.50 area. And if we can get above the overnight high and get in this double distribution right here, we're likely to chop around here. If we can't hold 55, we're likely to get stuck in this wick right here. This whole area of the profile, the composite profile, is pretty blunt, and there's not a lot of clear price acceptance. Got a little one here at 48.75, a little one here and around 42. I was looking at that 41.75 yesterday. I took a couple longs off of that one, and then 36. The next big destination down below us is all the way down here at the 27, and this is where we came back down in that between the 20.75 and the 27. The two microcomposite VPOCs, and then we bounced and came back up into value. Below 55, look for them to slowly grind down towards this 27 and look for buyers with some conviction. So let's go to the overnight. The overnight high is up here at 62.75. Just above the FOMC number. This should be 62 even. What is sitting behind it? Sorry. Oh, it's the midpoint. Okay. A little bit of a cluster there. And then we've got the overnight low down at 51.50. Which is basically right near our close. Our close was 51.25. And then our overnight VPOC is right at the year open at 55. I'm not going to put it in here just because it's, to me, they had a battleground yesterday, last night at the year open as they struggle to hold us up. There's no real clear LVNs from overnight. The VWAP is up here at 57.75. It'll show up here on this chart right here, so we can watch it on the Keltner. So how are you going to trade it today? Well, to me, this is going to be the main trade area at the year open. First target above, take the long into the 50. You can use 57.75. I'm going to use 58.75. It's a clear HVN from the middle distribution from the prior day. A little bit of resistance coming in right here at the 59.75, the VWAP, above the VWAP, and there's a little LVN right here at 60.25. So I'm going to use this 59.75 to 60 and a quarter, and then above there I'm looking for them to go and test the midpoint on the significant breakout day and up to take out the overnight high and come back up into the FOMC number at 62. Above here, look for continuation up into this 64, 65 area. Let me bring this down here so we can see the bigger picture. You've got this CLVN right here at 65. This is also the value area high right here in this microcomposite. So, and it's also a little LVN, and it was our IB, so that's going to be my next trade area up there. And then above 65, the clear destination we've got to be looking for is that 69 value area high, and where our VPOC was most of the day until they came and stole it into the close. So, and plus it's right there at that 70.50, but it's the HVN and the value area high and then where the VPOC was. So I'm going to be using the 69 rather than the 70.50. Oops, this is going to be a target and a trade area. Because if we get above there, then I'm looking for a move up to test that key line in the sand above, which is going to be the 74.50. Right, still sitting at 74.50. So 74.50. So off of the low overnight at 51.50, our daily 20-day ATR target is 25.96. So our daily upside target is up here at 77.50. And of course, remember the most important number right now, besides the year open, is this 78.50. And that is the composite VPOC. Again, most traded price going all the way. So if we get into this upper distribution of the triple distribution day, I'd be looking for us to slowly grind our way up to test the 74.50. And then if we do break 74.50, this is a really good trade from 74.50 up into the 78. Because it's within our daily range, but more importantly, you're going to get back into this upper distribution and inside of the value area of the shorter time frame. Actually, this should be, I have to take this right here because this is a breakout day and take yesterday out of it. That's what we call a significant breakout day. And then above there, you've got the range high and the open. Your first target should be the open from yesterday at 81.50, and then trade level at the 84.50, and above 84.50, the next big target above range and above value is going to be that 86.75. And I doubt we're going to get a trend day and come back up here. I figure we're either going to spend some time, today in the lower distribution below the year open, grinding our way down. They're about to put in a new overnight low. We'll have to watch that. Got another 25 minutes, and we're making a new overnight low. Look for them to grind down towards this 47.50 VPOC, naked VPOC from yesterday, and then you do have this 49.75. So I'm going to use the 49.75 as a trade area, because below 49.75 you could accelerate any shorts into the 47.50, or if we bounce off of it, take the bounce up into the 55 to test the upper side of the balance. But we'll have to watch this overnight low for the next few minutes. And then below that, the second target you'd be looking for down here. Is this 45.25 as a continuation? And then, of course, a move down the value area low and the range low from yesterday will be another trade area with any break below that, a move down towards this 36.75. You've got CHVN down here at 36, our daily down target off of the overnight high of 62.75 is right here at 36.75. And then, of course, remember that our weekly, we got 1 day left today in a week, and we're within range right now of coming down and testing the daily or the weekly ATR. Our weekly ATR is 73.21. Our weekly high is 21.05. So minus the 73.21, it takes us down to this 20.31.25. And then once we're below this 40 level and below the range, the next big destination down is this 27, 25, and 20 area, with the next key line in the sand all the way down at this 1750. You could even move this key line in the sand down into this 11 now, and I think I'm going to do that because once we get in here, we're going to chop around. So I'm going to take my key line in the sand and move it down here to the 2011, because we may just come down to this 11 and test the lower side of this distribution and then bounce. But below the 11 is another good trade because you've got the naked close here at 2008, and then you've got the next microcomposite VPOC down at 2006.75. 2006.75 is the last place that we accepted value after the breakout of this longer term value area. So once we broke out of this, the first place that they held value was the 95 area, and then they came up and accepted it higher, and then they blasted up, accepted it higher here at 21, came down, tested this area again, and then we made our big move up. So if we get down below that 11, I think that you could see a move down into the 08 and 06. And then below there, you get the 04.25. Of course, you got the 2000, and anything below the 2000, your main target below there is going to be 95. I'm just bringing in these lower levels now. I don't think we're going to come down there and hit them today, but we could get another big trend day today. So I'll be looking for a possible trend day setting up below the 36.75 and taking us down in towards this 25 and possibly down into this 11. Right now, below the, we're making new overnight lows as we go. We'll have to adjust our daily upside ATR target down. So let me just bring the Globex chart back up here. So we're coming right back down into this 47. We're just going to have to keep adjusting this this overnight low right now, which kind of changes my thoughts. We're going to open up in a very strong distribution zone, the lower distribution zone, right in around the balance. So I think that we could, on the open, basically, let me move this over, basically test this whole wick area and test down to the 40 and up to the 51 and really just end up with a pretty wide opening range in the first 15 minutes. So we'll have to keep an eye on it. So far, the low overnight is the 47, but I mean, we're only 2 ticks above it. So if I go 47 plus the daily range of 25.96, that's going to move us down to 73 for our daily ATR, which also happens to be last week's open. So that's interesting. And nothing else changes there. So let's take a quick look at the Renko. Right now, Oh, Lord. We've got a perfect, normally I would be trading off of this right now because this would be, I'd be getting long on this bar right here because what do you got? One, two, three, four, five, and the sixth bar, okay, is the highest probability. If I would have saw it, I might have tried to take the trade. Although the last two trades that I've taken on this particular one, actually three, two of them got me in trouble. The third one was the one that I got paid on, but it's been dangerous. You know, statistically, the fifth and sixth bar below is good for at least one Renko reversal to get in and get funded, possibly catching a much bigger move up. If we come here and close with a red Renko bar right here, then we're likely to get a continuation walk down into that 41. So just keep an eye on that as we come into the open. And then we put in another, yes, 46.75. So this is just going to continue to work its way down. We still have 15 minutes. While we're waiting for that, let's take a look at gold. Gold is finding some support and around the 68 to 70 level. The current balance is the 69.80, 70 level. We're currently trading it. If we get back above the 73.40, then you want to look for the break and get long into this 83, 85, 86 area. This might be where we start to walk up in gold. They didn't come down. They held the range, and now they're working their way back up. So I'll be watching the 73 area and probably trying to take a long from there into this 83, 86 this morning. That's going to complete our morning session. As always, trade well, trade safe, and we'll catch you on the flip side.